Now from this we move to the next month out there of the transactions out here. From April we have done this April part of it, and then I am going to move to the next part of the transaction out here quickly. Through the month of May, we have a set of transactions for the month of May. We will sort of work out all these transactions for the month of May as of now. So we saw that in the month of April we entered all the transactions. Let us continue. Let us go to the month of May. How does it look like? Now, when we look at the balance sheet, the balance sheet that was there at the end of April, on the 30th of April, evening 5 p.m., that is at the end of the day, and there is the income statement from 1st of April to 30th of April. On the 1st of May, how will be the balance sheet look like? The balance sheet will look like exactly the same out here. This is the balance sheet as of 30th of April, end of the day. That means 1st of May morning, how will the balance sheet look like? The balance sheet will look like exactly the same. That's all. It is end of the day of April 30th. What you own and what you owe will remain the same on 1st of May, unless overnight all your assets have vanished or all your liabilities have been has been squared off or given off or whatever it is. It will exactly the same. So when I go to the month of May, on 1st of May morning, when I start my day, my income statement from 1st of May to whatever, from 1st of May for the period May, for the month of May I am preparing, will look blank like this, obviously. And if I basically see this in this particular case out here, if I basically see this in this particular case, my balance sheet will exactly look the same out here like this, because this is what I own and this is what I owe out here. This is what I own and this is what I owe out here in this particular case. And 1st of May. Let us go back to the transactions. Let us go back to the 1st of May. There is no transaction purely because it's a May day, it's a workers' day, so it's a Labor Day, it's a holiday, so there is no transaction that has taken place. 2nd of May, I see a transaction. Rent against factory shed for the month of May, paid in advance. I don't know why, but paid in advance. Now what happens? I go back to the balance sheet out here. When the rent is paid in advance, what happens? My bank balance reduces. My bank balance, which was so much, basically now reduces by about 50,000, because 50,000 is the rent. My bank balance has reduced. So when you paid in advance rent, what happens? Your bank balance reduces. Now rent advance, your money with somebody. Your money is with somebody. Suppose you vacate the same day, the money has to come back. You have not enjoyed the benefits for what you paid. So it's an asset. Advance rent paid. Advance rent paid 50,000. Advance rent paid 50,000 out there. I'm just going to add 1 or 2 more cells out here, just for the purpose if I need to use it further. I'm just going to add 1 or 2 cells. Now I go back to the statement again. May 3rd, there is no transaction. May 4th, there is no transaction. May 5th, there is no transaction. May 6th, there is no transaction. May 7th, May 8th is when the transaction is there. Or there is one transaction before. Go back to the April 6th transaction. April 6th, if you look at, you executed an order for GS and you are supposed to receive the payment 30 days later. You are supposed to receive the payment 30 days later out there. There is no statement I see, but I presume since you have to receive the money from the parent company, I presume that on 6th of May, out there, I presume out here, since there is no statement, because it is only money from the parent company, I presume on the 6th of May. I presume on the 6th of May, you would have received that money for the job work what you had basically done for GS. I presume that you would have received the money that what you had done for, because you see receivable from GS you have received. If you have received the money, what happens? Your bank balance increases by 25,000, and the money that you are supposed to receive from GS, if you have received it, there is no money that is still receivable from GS, that becomes blob out there in this case. I have presumed that you have received, because it's a parent company, though there is no statement, to presume that you have received it. Now I go back and read payment received in account against 10 tons of CR supplied to Dulite. The balance 10 tons to be received in a week. That is what happens. Go to the April 9th transaction. April 9th, you executed order from Dulite, etc., etc., etc. out there. So what happens with regard to your report to receive so much of money from Dulite for 20 tons out there. So you have received 50% of it. For 10 tons you have received. For 10 tons you have received out there. That is what you call it as minus 10 into what is the value of the sale. The value of the sale was 51,000 out there. The value of the sale was 51,000. This is the amount that you have received. So what is receivable from them has reduced. When you have received, what happens? Your bank account increases. That is 10 into 51,000. That is what you have received out there. Your bank balance increases. You can see the balance sheet will always balance out there. It's a tightened balance. The remaining money, now what happens? The Dulite, which was supposed to give so much of money, has to give you only 510,000 or 5,10,000. They were supposed to give you 10,20,000, half of it they have paid. They said they will pay the other half in about a week's time. So let's keep it till the time they pay. Now how much do you have to pay? They have to pay you only 5,10,000. Tanai director took a 6-month interest-free loan from TR Steel of rupees 5 lakhs to repay a personal liability. Tanai, a director, took a 6-month interest-free loan from TR Steel of rupees 5 lakh to repay a personal liability. Now, one of the directors has taken money from the company. When they take the money from the company, normally what happens in that particular case is it will always be in 3 forms. A director or a partner will take money in 3 forms out there. Number 1, first and foremost, what happens when they take money? They can take it as a loan, as you can see. They can take money as the capital provider as drawings. The third is what we see, dividends. Dividends, I have explained. The profit basically shared with the capital provider is dividend. So this, let us ignore it. What is the difference between these two? A loan, when he has taken with or without interest, the capital remains the same. In this, the capital remains the same. In this, and the loan is basically what you have provided is an asset for the company, because you are liable, eligible to get it back from Tanai. So it is there. If it is in the form of drawings, what happens? The capital what they have given will reduce. So a director can take, or a partner can take money out in these 3 forms, loan and drawings. I will explain this same thing again. Supposing Tanai had withdrawn Tanai had withdrawn 5 lakhs as drawings, then what would have happened? What would have happened is simple, 1.25 crores, whatever capital he had would have gone down by 5 lakhs out there, and that's all. So what happens? Tanai's capital would be about Tanai, I mean it is 50, oh okay, I added a 0, I am sorry. Tanai's capital would be 1.245 crores out there. That is what will happen. And of course, cash and bank balance will go down by 5 lakhs, whatever may be the reason. Cash and bank balance would have gone down, and the balance sheet will basically, you can see it will balance, and I mean this is the mistake. Okay, the balance sheet will basically balance out here in this particular case out there. Balance sheet will basically balance out here.
It's because the cash, I think they reduced 50,000 and next 5 lakh.
No, here it is 50. Yeah. So if Tanai had withdrawn, it would be 1.2 crores out there, and what happens? It is about 5 lakhs of this thing gone, and the balance sheet would basically sit tight and balance out here. But in this particular case, Tanai is not taking the money as drawings. He is taking the money as basically a loan out there. So what happens? His capital remains the same. So what happens? Now the company has given a loan to Tanai. The company has given its money to Tanai. So bank balance would have reduced in the case that I have reduced it. So what happens? Tanai is liable to pay money to the company. So the company is eligible to get money from Tanai. So loan to Tanai. How much is it? 5 lakhs is the loan to Tanai, and you can see the balance sheet sitting tight in this particular case out there. So there is a loan which is given to Tanai, and that is it. The company is eligible to get the money back from Tanai out there, and that is how it basically sits out there in this particular case. So a partner can withdraw money in 3 forms. It can be interest loan, interest free loan, whatever it is. It can be in the form of a loan, it can be in the form of a drawings, it can be in the form of dividends. Dividends means if there is a profit, you pay out there. If there is drawings, the capital reduces. In this case, it's a loan, so the capital remains the same, but Tanai is liable to pay the money to the company out there. Now what happens further? This is on May 8th, and then it says the balance to be received in a week's time, and then we move to the 15th of whatever, May 15th, and 1 week from May 8th to May 15th, in that 1 week has lapsed out there. So we presume that the remaining money is also received from Dulite out there. We presume that the remaining, because on May 14th, exactly 1 week from May 8th, on May 14th, the remaining money is also received from Dulite, because it says to be received in a week's time. Let us look at honest business. Honest business, everybody pays on time. So moment you receive the money from Dulite, the remaining money, then what happens? Whatever money supposed to be due from Dulite, it does not exist anymore out there. So that is gone. So what happens? Your bank balance basically increases by another 10 into 51,000 out there. In this particular case, my bank balance increases. You can see the balance sheet will sit tight and balance. Why? Because I have presumed that you have received. Sir, what happens if you have not received? Well, let us look at straight and honest business. So we have received. If you have not received, if they had mentioned you have not received, let's handle it that way. It will still remain as a receivable, and your bank balance would not have increased. If you have not received, the bank balance would not have increased by so much, and this receivable will continue as a receivable. That's all. We move further in this case. May 15th, TR Steel invested 15 lakhs in government securities from the excess bank balance. 20 lakhs were put in liquid mutual fund for 1 month. Both carry an interest of 7%. Now what is happening? you are doing some treasury functions out there. So, what happens? Investment in government securities. What is the amount? 15 lakhs. Why have I written it as an asset? Obviously, your money you are investing in a government security, you are holding a bond of government bond. Owned by whom? Owned by TR Steel. So, it's an asset. Moment you invested, what happens? The bank balance reduces by that said amount out there. The bank balance has reduced by the said amount. Then there is 7% liquid mutual fund out there. 7% liquid fund. How much you have invested? 20 lakhs out there. Why? You have parked the money somewhere, because money in the bank account doesn't, in a current account doesn't earn interest. So, you want to earn something. So, you have placed it in a 7% interest account out there. So, what happens? Your bank balance further goes down. So, what is happening? An asset is getting impacted twice. That is liquid mutual fund you own, as well as your bank balance is getting impacted. Asset is getting impacted twice in the process out there. I go back to the statement again. So, what is that? Both earn an interest of 7%. Now, let me say investment in government securities at 7%. At 7%, I have just kept it there. So, what happens? When you earn an interest, the day you earn an interest, it's a revenue. The day you don't earn an interest, no revenue. That's all. The day you earn an interest, it's a revenue. The day you don't earn an interest, not revenue, no revenue out there. It is not, there is no revenue out there. So, this is retained earnings, I would say, for total retained earnings out there. Let us keep it this way in this particular case out there. Let's worry about it as we go along. A fire and burglary insurance policy covering fixed and current assets, including factory shed, offering a sum assured of 75 lakhs, was taken against a premium of 36,000 per annum with effect from 16th May. Please note, with effect from 16th May. I am sorry, I have not changed the dates in the other so far. This is as of 15th May. I am sorry, I forgot to change the date as of right here. So, as of 15th May, this is how it looked like, and from May 1st to May 15th, this is how it basically looked like. Now, in this particular case, I said this retained earnings, what we saw is carried forward from April, carried forward from April. So, let us say retained earnings of April. Now, again I go back here, fire and burglary insurance, 75 lakhs. Now, when you take an insurance policy, you pay, what is it? It's an expenditure. It's an expenditure. Now, what is the expenditure? 36,000 is the expenditure that is paid for a premium, against a premium. It is not 75 lakhs. 75 lakhs you will get if at all there is a loss. As of today, 75 lakhs is only a contract on paper. But what is the cash outflow that has happened? 36,000 is the cash outflow that has happened. So, what happens? Your bank balance reduces by about 36,000. But what happens? The insurance policy is taken, agreed, it's an expenditure. Now, what are we preparing? We are preparing as of May 16th, as of now, May 15th or May 16th? 16th, May 16th as of now. So, what happens as of May 16th? And eventually, this statement is going to be for the month of May. So, we will take expenditure only pertaining to the month of May. We will take expenditure only pertaining to the month of May, and the other expenditure we will not consider. So, what happens? Insurance policy. So, we said the bank, it goes down by 36,000 is what you pay. So, only expenditure pertaining to the month of May is what we will write here. So, what is the total insurance premium? 36,000. And basically, if you look at this 36,000, 36,000 pertains to how many months? 12 months. 12 months means what? 24 fortnights, because why am I taking is a fortnight? Because the insurance policy is valid from May 16th. So we are taking only for a fortnight. So there are 24 fortnights in a year. So that means 1500 worth of insurance is pertaining to the month of May. The remaining is what is unutilized. Unutilized insurance premium, that is my mistake. Unutilized insurance premium out there, that is 36. Oh, number lock is not there. Okay, I'm sorry. That is basically what happens. That is 36,000 minus whatever is utilized for the month of May. Sir, yeah, you are preparing from 1st to 16th. Yes, but eventually this is going to be from 1st May to 30th May. So I have taken what pertains to the month of May out there, the entire thing as an expenditure. Agreed. As of 16th of May, 1500 is not utilized. Because we are going to prepare the income statement from 1st of May to 30th of May, I have taken this 1500 as an expenditure for the entire month of May. So the remaining 34,500 is unutilized. Next, if I want to prepare them for the month of June, I will take whatever is the expenditure for the month, 1 month, and you write it as an expenditure in the month of June out here, and then keep the others as unutilized out there in this particular case out there. So that is all that happens. Now this has happened. Now what happens? Sir, we have to calculate the profit. Profit before tax is revenue minus expenditure out there. My tax is blob 0. So I'm sorry. So tax is 0 in this particular case. So my profit after tax is 0. My dividends is also 0. So my profit after tax basically is also 0 in this particular case. So my retained earning is 1500. So let me say, normally retained earnings, we will just say retained earnings, not for April, for May, for June. We don't say that. We just say retained earnings. So it will get added to this. It will get added to the already existing retained earning. But for the benefit of explanation, I am writing it separately, retained earnings for the month of May. I am writing it separately only for the benefit of explanation and for understanding, or else it will be combined together out here. So retained earning for the month of May in this case will be 1500 out there. Will be 1500. If you or else what you can do, retained earnings in this particular case, I can just say this. I may not do this. I can just say retained earnings out there, not for the month of April. I will just say retained earnings out here, and then all that I have to do is I have to just, this is the retained earning that is already existing in this particular case, and then I just will have to add this retained earnings to that out here, and that's all what basically happens in this particular case. The retained earnings out here in this particular case out there, retained earnings, simple. I've kept it simple. So it just gets added to it in this case. So retained earnings for April was 200,972. As of 15th of May, it is 202,472. That is negative losses increased. Now I go back to my statement out there. On 28th May, there is no transaction unfortunately for this business. I don't know why. On 28th May, cash amounting to 1 lakh was withdrawn from the bank. I go back here. Cash amounting to 1 lakh was withdrawn from the bank. That means what happens? My bank balance reduces by 1 lakh. My cash balance, all that happens is my cash balance increases by 1 lakh. An asset is getting impacted twice. You see the balance sheet will sit tight. Perfect. Go back and reread it. May 28th. May salary is credited to employees and directors' accounts. The four employees of manual labor were paid in cash. Other petty expenses were settled in cash. Electricity bill was paid through check. And loan payment of ICICI Bank for the month of May was also paid. And with that, we basically close this. I go back and let us record all those transactions out there. That is salary of directors. how much is it? 70,000 into 2. So, that is the expenditure out here. Now, that gets reduced from the bank account out here. In this particular case, that got reduced from the bank account. Now, next, salary, one by one I am just going to go back and then see this out here. Salary, that is stock manager salary, accountant salary, foreman salary, shed manager salary, watchman salary, manual labor, then petty cash, done. Again, after petty cash, electricity bill, then depreciation, then there is depreciation. If you see this depreciation, then depreciation on what? On decoiling machine, shearing machine, office equipment, these are the three other aspects out there. So, let us look at all that, I mean all the other salaries out there. It is going to be the same. I am just going to copy everything from here in this particular case. I am just going to copy everything from here. Since it is going to be the same, or let us do one thing. No, not to worry. Stock manager salary 20,000, accountant salary 20,000, foreman salary 15,000 into 2. Am I right, Suhail? Yeah. Shed manager salary 20,000, watchman salary 8,000 out there. Now, all these have to be paid for from the bank account out there. So, I am reducing it from the bank account out there in this case. Manual labor 4 people into what is the manual labor? 8,000 per person, that is paid for by cash. So, I will take the cash out here and then reduce that by cash out here in this particular case. Then let us go back. What is the petty cash? Petty cash was 4,260. 4,260 was the petty cash. So, that will also go down from cash out there. So, I will reduce that also from cash. Electricity bill was 28,500. Electricity bill was 28,500. That will go out of the bank account. So, I will reduce it from the bank account out there. Then there are depreciations. Here in the month of April, we did all these depreciations every month out there. We did the depreciation. Same calculations. Let me do the calculations out there. If you want to, I can do that. That is, when we talk about depreciation, I need to explain one more aspect of depreciation out there. We do depreciation in two forms. That is, normally your tax laws permits you to do, that is what we call it as straight line method. Another is reducing balance method. Or what they call it as return down value method. What are these two? I will take a simple example and explain. Supposing I buy a machine for about 10 lakhs. I say life is 10 years. I use a straight line. So, what happens? Every year my depreciation is 1 lakh straight, year 1, year 2, year 3. So, in short, if I have to say that, I will say year 1, 2, 3, 4, depreciation 1 lakh, 1 lakh, 1 lakh, and then so on. So, value at the end of the year here is at the end of the year is 9 lakhs, then it becomes 8 lakhs, sorry, 7 lakhs, and then 6 lakhs. Under the second method, what happens out here? Very simple out here. I will say under the written down value WDV method, I say the machine depreciates at 10% every year. When I say depreciate at 10% every year, what happens? Same thing, year 1 in this particular case, year 1, 2, 3 and then 4. What is the depreciation? Value of the machine is 10 lakhs, 10% of 10 lakhs is 1 lakh, first year depreciation is 1 lakh. So, value of the machine is 9 lakhs. Second year depreciation on the WDV, written down value. What is the written down value at the end of 1 year or at the beginning of the second year? 9 lakhs is the value at the end of at the beginning of second year and at the end of the 1 year. What is the depreciation rate? 10%. So, what is the depreciation? 90,000 is the depreciation. Value of the machine is 8,10,000. Third year, beginning of the third year, what is the value of the machine? 8,10,000. Depreciation 10%. So, depreciation for the third year 81,000 and value of the machine is 7 lakh. 8,10,000 minus 81,000. So, 7,29,000. Beginning of the fourth year or end of the third year. So, fourth year, what is the depreciation? 72,900 is the depreciation. So, what is the value of the machine? 6,56,100 and so on it goes. This is what we call it as WDV or written down value method. In this example, whatever we have used, we will be using what is called as the straight line method of depreciation. I am not going to use the WDV, straight line method of that is what they have also given. So, when it is a straight line method of depreciation, what happens? The depreciation will be on the original value. What is the original value? 42 lakhs was the original value minus what is the salvage value of the machine that was given? 4,80,000 is the salvage value of the machine that they had given, to be depreciated over how many years? 12 years, and again I am depreciating it for 1 month out here, again I divided by further 12 out here, and that is what it is. That is it, 25,833, and that is the same amount what we took out here. So, for the next one, it is what is the original value of the machine? 15 lakhs minus 90,000 salvage value divided by 12 years, and further I will divide it by 12 because I am looking at for 1 month. Third, office equipment 1,50,000 divided by what do you call it as 3 years out there, I divide it further by 12 out here, that is all, because I am looking at for 1 month out here, I am just dividing it by 12 out here in this case. But now what happens? This decoiling machine, beginning of the year, this was the value, that has further reduced by so much, end of the year, this is as of all these are after as of May 30th, I have to make the change, I will make the change in the date as of now, all these as of May 30th, 1st May to 30th May, before the salaries payment I should have made it anyway 30th May. Now, shearing machine, this was the value at the beginning of the year. Now, what happens? It reduces by so much, that is as of 30th May, this is the value. Office equipment, this was the value. Now, what happens? It reduces by so much, this is the value. So, what has happened? Your loss has mounted, the capital has further reduced. But there is one more aspect which I have missed in this case. You see this, on 15th, you have made 2 investments and both have an interest of 7%, and as of 30th. So, what has happened? For 15 days, there is an accrued interest. Interest has accrued. You have earned interest, but you have not received it. Agreed, you have not received it. but you are eligible to receive it. That means interest has accrued. So, accrued interest on government bond, on government investment, accrued interest on what do you call it as on the mutual fund, liquid mutual fund. They are accrued interest. What is it? Your accrued interest is at 7%, 20 lakhs. Now let us say this is 15 lakhs. Let me do this. This is 15 lakhs out here at 7% out there, divided by, it is only for 15 days because only on the 15th you invested. So, basically divide by 24, it is only for a fortnight. This is what is the insurance, this is what is the interest that you earn. Second, you have got it, you have invested 20 lakhs, again interest is 7% out there, again divided by 24 because only for a fortnight. So, what happens? You have an income and your loss is reducing, but these are all accrued interest, you have not received. So, accrued interest. Accrued interest. What is accrued interest? Accrued interest means you are eligible to get this interest. I am adding both and putting it together. I am adding both and putting it together. Adding both and putting it together out there. You are eligible to get it. It's an asset. Then one more last item. There is an advance rent paid for the month of May. On 30th of May, it is not an advance because you have enjoyed the benefit of it. It becomes an expenditure. A rent is an expenditure. How much is it? 50,000. Does cash go down? No, cash does not go down. Only what happens? The advance what you have paid is not an advance anymore. So, what happens? The asset is again impacted out there. It is not an advance anymore. The advance what you paid is now the benefit is utilized. So, it comes as an expenditure. It is not an advance anymore. So, the advance becomes 0 in this case. This is the interest that has accrued. Have I received it? If I had received it, my bank balance would increase. Because I am eligible to receive it, what happens? It is an accrued interest on investment. I will write on investments. On investments. This is eligible to receive asset, my money with them. So, at the end of May, my balance sheet is beautifully like this. I made a loss of 383,000 only for the month of May. Now, my total loss is 584,000. So, what happens? My net worth is only so much. My net worth was 5 crores when I started on 1st of April. On 30th of May, my net worth has come to 4.9 crores out there. So, what is net worth again? All the equity, all the money belonging to the shareholders. That is what? This is what minus the retained earnings. Or all the assets, value of the assets minus the liabilities. Minus the liabilities. One more aspect I left out in this, interest on my IC loan. Interest on loan, I am sorry, I left out that interest on loan out here. I had calculated interest on loan out here. Let me calculate that also, interest on loan. What is the interest on loan? What is the loan? My loan is, this is the loan what I have. On that, it is at 11% is the interest. Again, for a month out there, and this is the loan interest out here. Again, to that extent, my money will get reduced from the bank out there. My money will get reduced from the bank. So, what happens? Your loss, retained earnings is about 605,000 out there, and this is net worth. That means what? I sell all the assets, I generate so much of money, 5.55 5 crores, 5 crores 50 lakhs 94,000. This is the money I generate. I pay off these two liabilities. Then what is the money left? Money left is 4 crores 93 lakhs 94,285. To whom does it belong? Belongs to 3 people. How will they share? In the ratio of their capital contribution. So, I hope discussing these two statements would have given you a fair idea about the interactions between the P&L and the balance sheet, or the P&L and the balance sheet itself. go back, relook at it. I've uploaded all these documents out there. Relook at both these statements out there. Relook at both these statements out there. Relook at, I'm just going to save it. I'm just saving it. I'm just saving it for the purpose. I'm just saving it. Relook or recast it. Do it by yourself, both for the month of May and for the month of April. Try and see if you have any doubts. Always get in touch with either my TAs or me. We move forward from here. Okay. Thank you very much. Thank you.